Okay, it is 2 p.m., October 23rd, 2024. I'd like to call to order this meeting of the Budget and Finance Committee of the San Lorenzo Valley Water District. Would the secretary please call the roll?
Yeah. Jeff Hill,
Here.
Jim Bond,
Here.
Bob Foltz.
Here.
Okay, we are here. We have quorum. Second item on the agenda, oral communications. This portion of the agenda is reserved for oral communications by the public for items which are not on the agenda. Please understand the California law, Brown Act, limits what the board can do regarding issues raised during oral communication. No action or discussion may occur on issues outside of those already listed on today's agenda. Any person may address the committee at this time or on any subject that lies within the jurisdiction of the district. Normally, presentations must not exceed 5 minutes in length, and individuals may only speak during oral communications. Any director may request that the matter be placed on a future agenda, or staff may be directed to provide a brief response. Do we have any members of the public that wish to provide comment or oral communications? Seeing none in the room and seeing none online, we will move on to the next item on the agenda, which is new business. Members of the public will be given the opportunity to address each scheduled item prior to committee action. Chairperson of the committee may establish a time limit for members of the public to address the committee on agendized items, and we'll set that at 3 minutes per comment. Item A, utility billing policy and delinquent accounts. Discussion regarding the utility billing and delinquent accounts. Okay. Would either of the other committee members care to make a comment on that utility billing document?
I just have one comment.
Yep. Okay. Jim?
My only question was, and we specify, pardon me, I carefully wrote up notes and then carefully left them at home, but I can remember most of them. There's only one issue on this one, and that is we say we're going to communicate with people.
Mhm.
We don't actually specify how. Do we need to specify we'll communicate in writing or email or best efforts, or do we need to do that?
Okay, I would agree with that. Bob?
I think it's communicate.
Yes.
I don't know that we need to specify it because it may vary by person.
Mhm.
And I think that's something probably that the customer service people can't. I don't know if they're making notations in the CRM or what have you is the best way to contact people, but I'm assuming something like that is
Okay, that was my only question then. Other than that, it was great to me.
So Bob, do you have any comments?
Yeah, I do. One of the things, since I helped do this in reaction to the really bad one-size-fits-all state law that was passed around this, we had said at the time that we would run it for a while and see if there was any additional tweaks that needed to be made. And after reviewing this, Heather, and thank you for putting together the information, I really had 2 things that I wanted to focus on. The first one was the date at which we collect accounts to send to property tax rolls. Is 12/31 a statutory requirement, or is that a policy preference that could be modified?
I believe it's a policy preference from staff because of the time that it takes to send out the 2 letters and then get it to board. It is essentially the timing to get it on the property tax roll.
8 months is a long time.
Yes, it is.
And while I understand the need to have some amount of time for doing the 2 communications, what have you, and perhaps getting people into, payment plans, that is a really long time. And what I noticed is while the consolidated report had about 180,000, at the end of December, by the time July rolled around, where we actually voted on it, it had gone up to 300 and some thousand. And so that's a lot of slack there in the process. I think it would be helpful to try to cut that in half. Make it like in April or April 1st or something like that, because that'll shorten the time. It'll allow us to collect more cash in a shorter period of time. And we'll keep the distance between when it actually goes to property tax and when we do the accounting on that to a minimum. I appreciate the time, but 8 months just seems like a really long time for that. The second question I had was around the trigger for what gets sent to property taxes. It was a threshold of $500. And I'm wondering if that needs to be made into an and/or condition of both amount as well as how many days or months somebody is in arrears. So, conceivably, you could have a low usage customer that could be in arrears for 7 or 8 months and not hit the $500 threshold.
Do you have a suggestion as to that combination? I know what we do right now is the report comes out over 120 days. So I don't know what the tail is like after, 90 to 120 days, but it would seem to me there's probably some Pareto you could do on that tail to figure out, where's the sweet spot for sweeping people into that are at a particular point in their arrears. Maybe it's 120 days, maybe it's 180 days, I don't know, but I think we need to have an and/or condition there. And as far as the amount and $500, our median bill, I think, is around $100. But there are a substantial number of people that use, 1 unit a month, which under the current billing is $50 some. So it would be a much longer period of time for them to hit that $500 minimum.
So how would you feel about, say, a threshold of $250 and 180 days?
I guess this is one of those things where I think there's probably an hour or two analysis that could be done here by staff or Heather to come back with a recommendation on a sweet spot for that. I just don't feel like I have enough information to be able to figure that out.
You don't want to just do it arbitrarily.
I think it would analysis, helps because, there's a trade-off here between sweeping people in too quickly before giving them an opportunity to get under a payment plan and being too hard and being too soft, and that we allow things to go on and on for so long that it's detrimental to the district and to the customers that are paying. Right. And so there's a middle ground that I'm trying to reach, and I'm not exactly sure where that is.
Okay.
And Bob's suggestion is perhaps an either or would be the right way to frame it.
Yeah. I mean, it's if you're over 180 days or 150 days or whatever the number is, you get swept. If you're over a certain amount, you get swept. If you're both, you get swept. Right.
Yeah.
So, yeah.
I mean, so technically, the 180 could be a bill of I'm just throwing out a number, about 200, because they're over the 180 days and they would be swept.
Yeah.
Even though they're under the 500 is what you're proposing as an idea.
Yeah, because again, unless there's some labor I'm assuming this information is pretty much generated through Springbrook on a report of some kind, that you can get varying levels of AR aging detail consolidated as well consolidate as well as by account. And I would imagine then once you have it into account, you can throw it in a spreadsheet and do some analysis on where people are currently and try to figure that out.
All right. So, if I'm here, oops, sorry, I'm sorry. Or did you have another question?
Okay, go ahead.
I did not.
No, go ahead. That was me.
Okay. If I'm hearing you right, you would like me to come back with, I'd like to chat with staff about the date, the 4/1 date that you've got proposed, see if we can shrink that. And then come back with a recommendation for, an and/or trigger, like we've discussed here.
Yeah.
And bring that back at the next budget and finance committee.
Ideally, yes, that would be great. From my
Okay.
perspective, I don't
Yep.
know if Jim and Jeff, okay, well, we got,
You
I'm
got,
fine with that. I think that's a great idea.
okay, that works for me.
other than that, Heather, I mean, I thought that, you know, the policy's a little bit convoluted, but it is what it is in regard to the state law 99 something. I forget what the number is, but
Yeah, I have it documented, but I do remember that time
Yeah.
in city government and it was quite
It was-
crazy.
it was just a horrendous law. And we responded as best we could without going overboard.
Yep. I hear you. Thank you.
Okay, I
Thank
think
you.
we're all in agreement on that. Heather has the action item.
We do need to hear from.
Public comments from the public on that?
Yeah, I've got my bill here, and the slot is roped off. Can I give this to staff? Thanks. My bill was for $74.05, which was 1 unit. So if you did that for 6 months, that would be $444. Everybody's paying $65 a month, so 6 months, even if you didn't use any water at all, would be $390. And in the discussion I was hearing, people are paying $50 a month. It might only be $200 for 6 months. Those numbers are way off. So I guess the main thing I didn't get in the discussion was April 1st. I was hearing 180 days, then I was hearing April 1st. I guess I lost something here. There's a date in the summer, which is the last day that the district can add to the property tax bill. That's probably August 1st.
That's in August. I'm not sure exactly which date, Bruce. Right now what's happening is the aging as of 12/31 is what's used to bring forth into July for voting and August for submission. That 8-month period is a long time. I'm just suggesting we shrink that down somewhat.
Yeah, okay, that makes sense to me. So that's the April 1st alternative.
Yeah.
Okay. But I just wanted
Do
to-
the accounting closer to the date that we have to
Yeah.
turn the report into.
But still give staff enough time to get 2 notices out as well as try to get people under a payment plan. Awesome.
Okay, thanks.
Thank you. Okay, I had one comment on this, which was that there is some language in there that will change depending on what may Measure U. So we need to take a look at that also. If Measure U passes, there's some language in here that we'll have to change. I think that's just administrative changes, so not necessarily policy changes. Okay, moving on to the next item. Cash flow analysis. I believe Heather has assembled a cash flow for us to look at. And Heather, would you like to start this off by presenting it?
Yeah, this is an interesting one for me. There's a lot of numbers, as you guys saw in your packet. I did not necessarily prepare a PowerPoint or necessarily plan to put something up, but I am prepared if you would like me to. The committee requested, and I've heard it also from the board, requested a cash flow presentation. This assumes the presented cash flow projection incorporates many assumptions. It uses for 24-25, it uses the board adopted budget. For future years, it uses the rate study financial plan, except where noted. I made little changes because I saw things that were not included in the rate study plan, certain revenues, and I added them in. There's also, I've also included a priority project listing provided by the engineering manager. And then no capital was provided for 28-29. So that was excluded. To look at this as a work in progress. This is first draft. I heard you that you wanted it by quarter, but I figure I needed to first get the year by year correct before we converted it to by quarter. FEMA, I am doing a presentation on November 7th to the board regarding FEMA reimbursements. I have had a chat with Aptim, our consultant, and we sent an email to Cal OES regarding timing for the projects that are complete and approved, and all documentation submitted. And the response we got from Cal OES was, we are too busy to respond to you, essentially. You'll get your payment when you get your payment. We're busy. Some of these were completed and information provided years ago. That makes it really tough for me to tell you when we're going to receive that money. But we are looking at about 1.5 million that we are waiting for. So I could plug it into this fiscal year. I could plug it into next fiscal year. It's a guess. So I'd like to take information from you on how you want this presentation to go. I can bring up spreadsheet by spreadsheet on the screen. There's a lot of numbers. So I am looking from you guys what you want me to share on the screen, if that's what it'll do, or what you want from this presentation. It's like I said, I look at this as a draft. I expect a lot of input from you. And again, I'll convert it to quarterly once we're comfortable with annual. So that concludes my introduction.
Okay. Jim, do you have any comments?
I'll remember the stuff I wrote, but it wasn't too big. First of all, great for acknowledging this is a work in process. It tells me it's an ongoing process. So
Yeah.
great. And I don't know what you can do. I mean, I don't have an opinion on how you're going to handle FEMA. It's a shame not to plug it in somewhere, but because it's money we're going to get. The first question I had was, and I should have, this should be obvious to me, but you've got orange and green outlines on the on attachment 4, or actually attachment 3, attachment 2. What's the significance of the green and the orange?
Green is on the priority project list. Some are green, some are orange. The top bucket are the projects in progress. The bottom bucket are the proposed priority projects. So the projects in progress, they're finishing up. They're hopefully going to be done by the end of November. But I wanted a picture for you in the total project listing on which ones we are talking about here and which ones we are not. So this projection leaves out a whole lot of projects on the budgeted project list.
Okay, I understand now. Okay.
Yeah.
So is there a listing of the projects that are on the budget list that were excluded from this?
Not specifically, but it's the ones that are not highlighted on attachment. Hold on. Attachment 3.
Okay, so the ones that are not highlighted You just, they're there, but you haven't added the numbers into the
Correct.
calculation.
This is really, it was my understanding that this cash flow was about where is our priority? If we are given, you know, if we don't get any bond funds, if we don't get any other revenue sources, where are we going to spend our money? And this list, this priority project list was the list that the former general manager and the engineering manager came up with. As in, these are our priorities. And in attachment 5, you'll see some logic, notes, and reasons for prioritization off to the right-hand side on attachment 5.
Yep. Okay.
I'm a little confused still about the colors though, if I can just.
Yeah,
So,
no,
so when I look at attachment 3 and the listing of items that are in orange,
yeah,
it doesn't appear to match up with the items in attachment 4 and 5 in terms of the orange listing. And green possibly as well, though it's a little bit harder to tell. How do I reconcile that?
okay. When I look at attachment 5, and I happen to be looking at a giant, well, here, you know what? I'm gonna go ahead and, are you guys able to actually see the screen if I put something up?
Yes.
Probably.
Okay, so let me, if I can have sharing turned on, that'd be great.
You're a panelist, you should be able to share.
When I hit share, it says the host isn't allowing multiple presenters sharing for this webinar.
Unfortunately, it's a Zoom default setting to not allow till you allow them.
Scott, if
Yeah.
probably right next to your share button, you can click on multiple. Like right next it, there's like a if you're the presenter.
Right now.
Okay. I can share now. Thank you, Scott. All right. Okay. So are you able to see that at all?
Yes.
Yeah.
Yes, very
Okay.
clearly.
Okay, perfect. Okay, so you've got your projects in progress, Glen Arbor Bridge, Caltrans, Foreman Access, Fall Creek, Altavia Pipeline. And in parentheses are the work order numbers, an internal numbering process that the district uses. And if I click on this page, there's Glen Arbor Bridge in orange. And let's see, Glen Arbor Bridge in orange.
Yeah, no, I mean, I think what you're saying is that some of the items in attachment 5 have multiple work orders associated with them.
That's
Um,
definitely, yes,
let
like
me take-
EWR tanks.
well,
yeah.
let me take a look here at, sorry, we're,
Big Lion Steel's got 3.
yeah, and 2021 CIP has 4.
Yes, 5. Yeah, I think it's 5.
Okay. All
Yeah,
right.
believe me, that's
So-
confused me since October, for a year now.
Okay.
Yeah, so these numbers are one of the things that helps me go between pages and to identify projects.
Yeah,
Those work order numbers.
yeah, I understand. That's fine. I mean, now that I understand what you're
Yeah.
doing. Okay, the other, another question I have, when you said $1.5 million, you were referring to Cal OES.
Okay, that's something I'll be talking in detail about on November 7th. Let me just spill the beans now.
Is that
FEMA is the grantor. Cal OES, State of California, is the recipient of the grant. The district is a subrecipient or application to Cal OES. We do not get our money directly from FEMA. We get it from Cal OES. I just learned that Monday, I think it was.
And is the $1.5 million the total amount that's outstanding right now that we've
No.
received, that we received payment for the other 6.5 million that.
No, the 1.5 million is the part that they've approved. We have a whole lot of projects that FEMA and Cal OES have not approved yet.
Okay.
So, and a lot of that 6 million you're talking about isn't complete yet. So therefore, we don't have it necessarily on a list yet. So what I did was I downloaded a report, multiple reports from the FEMA website that gave us a list of all of the projects that they have. And it shows the phases. And there's one phase where essentially it's the phase where essentially the project is complete. All of the documentation has been submitted and all of the levels of approvals. That's the money that we can count on. All the rest is in some phase where environmental has to be reviewed, hazard mitigation has to be reviewed, insurance has to be reviewed, project scope isn't even determined. So
A comment here on attachment 3. You have that sorted in work order or work. Yep.
I do, that's the attempt at it, yes.
Yes. I think this would be considerably easier to understand if you had it sorted by green, orange, and white.
Well, I'd sort it by orange and then work order in orange.
Yes,
And
and
then,
subtotaled
yeah,
for each of those.
because you can sort by color as well as by.
Yeah.
Yeah, no, I can do that. Okay.
That would be much easier for us to follow and explain if you had
Okay.
all of the, like you do on the other one where you have them grouped by color. Yeah,
Okay.
that should be a couple of minute resort.
No, that's easy. I can do that.
Yeah.
One other item on here, though, that is a really big deal. And this is something that previous finance managers have struggled with as well, is the capital replacement value.
Yeah.
So I think previous manager estimated it at 75 million. You've got it at 150 million, but the real number is closer to 400 million.
Yes.
And I actually have a spreadsheet that I'd shared with previous folks, which I can share with you too, Heather, if you'd like.
You've actually already shared it with me. The last meeting, we talked about reserve policy, and I told you that that would not be complete at this meeting. And when I asked you if you wanted to wait for the cash flow, you said you wanted the cash flow presented and that we could essentially set aside the beginning reserve until after we got to the reserve policy. So I knew that that was something that was in draft form, and I got your permission to present this with that in draft form.
So
Well,
how does that impact the
it-
numbers we're looking at here? I would think
substantially.
Yeah.
I mean, that's the only, I mean, yeah,
This
I
guy
mean,
right here.
I figured we could plug in 350 instead of 150, and that wouldn't be a huge, wouldn't be a huge lift on time. Because it does impact your reserve policy as it's proposed
Yeah,
for cash.
I believe our last audit had it set at 450.
450.
I believe that's what it was.
Wow. Okay, cool. Well, my numbers are 3 years out of date at this point.
Yeah.
So. Yeah. Okay.
Back when iron cost less than gold.
Yeah.
Yes. Okay.
Do our operating expenses include the rate assistance program as well, Heather?
Yeah, yes, that is actually up here in it's offset in water consumption sales.
Oh, okay. You've offset it, not
Yes,
create a separate line item. Okay.
Yeah.
yeah, it's in here.
Adjustments there, yes.
Correct.
Is that the forgiveness of AR? No, it's water revenue adjustments.
That
No,
is,
That's way,
sorry, the low income discounts.
yeah.
That is what that is right there. That
What?
right there.
Oh, yeah,
Escape.
you're offsetting it in the sales line item itself.
Correct, right there.
Yeah,
Yes.
okay.
So, so Heather, I'm, I'm not qualified to look at line items, but I just looked at a couple anyway, just to try to understand the spreadsheet. And
Yes,
so
please.
if I look at attachment 3, at the bottom of attachment 3, there's a large item called the Lion slide repair, which has a work order associated with it. It's white. But if I read it correctly, it says that we're budgeted to spend $5.5 million on that on fiscal year 24-25. Is that correct? Am I reading that correctly?
You are reading that correctly. I am unqualified to speak to the
Okay.
specific projects.
So,
The
Bob,
lion,
you want to explain that
yeah, the
one?
lion slide back in 2017 during the deluge of biblical proportions, the road going up to the Lion treatment plant,
Sure.
yeah, washed out. There's been work done to move the road from, rather than repair where the road is, to just move the road. I don't know if it's 5.5 million. I don't think it's going to be done this year.
Well, that's kind of, I
Right.
was a little surprised that
Yes.
that's a big number and it hadn't perked up.
Part of the reason that we're able to potentially do the move is the fact that when the fire came through, it damaged a lot of trees that we were able to take out. Therefore, when you
Making
take
it
the
easier.
trees out, you can now put the road there.
Yeah.
Right. Whereas before, if the trees were still there, it wasn't clear you'd be able to move the road
Okay.
due to environmental regulations. So,
The other part of that too is that even though the road slid and washed out, there is a way to get up there with a vehicle.
Yeah.
It's not very good from what I understand, but
it's passable.
we're basically operating under emergency conditions in terms of road access there.
Yeah, and
So-
again, I didn't want to, I didn't want to draw, it's just an exercise, because it was such a
Yeah.
large number. I thought, well, if I understand this, then
Yeah,
I'll understand some of the others. So,
and it's entirely possible we might not fix it for a couple of years.
right, right. And it'll move out. It's in this year's budget, but
Yeah.
it may move out.
Yeah, I think it's almost certain to move out.
Okay.
And unless, we have another washout that affects the alternate route that we're using right now, it may be a while before we get it fixed.
The other question I had is kind of just a general question, Heather, just because I'm curious. Does this exercise help the staff? Is it just a burden, or do you think that this, as it goes along and gets refined, do you think it'll make planning easier? Feel free to be
This-
honest.
I will be honest, that's just who I am. I'm not sure to this degree that it's going to be helpful to staff. What this is of benefit to staff and hopefully to the board is, earlier, I guess this year, we proposed a bond measure. And because there's no way, if we look at this, here's our net cash flow each year.
Mhm.
Okay. And the only projects that you've got included in this cash flow are what's listed here.
Right.
And if you look on here, there's a whole lot of projects that are budgeted that are not included in that. And so I believe that this is more of a tool that hopefully will help the board determine how they want to prioritize their money and what can be done and what can't be done with the money that comes in without additional debt.
It really struck me that past this year, it gets real fuzzy.
And yeah, it
There's no
does.
long-term planning.
Yeah.
I mean, the bottom line here is we don't do long-term planning.
Yeah.
And, when you go to the community and say, give us money, but we only do planning on an annual basis effectively, it's
And
really
that's-
hard to tell people what their money's
And
going.
it kind of gets back to my question about planning. I mean, to me, it's only useful if we can plug in numbers in 2026 and 27, and that
Right.
gives us, some idea of just how much we have to borrow. So to me, this is a super good start.
Right.
Yes.
And I think if we keep refining it, then I think from my perspective, will be helpful. And I'm hopeful that the person that has to balance the books is going to find it helpful too.
Yeah, no, I agree. This allows us to, when we're planning budget and looking out a couple of years, to say, okay, we've got these proposed projects here. What's the priority on them? And what happens if we plug that one in here and that one in there? And that gives us a much better look at our cash flow.
I think there's a couple things here to come to mind, and that is how ultimately the board and staff work together to forecast how much can be done in a year.
Mhm.
Right. So I mean, when we looked at this year, we're talking about spending $24 million or something like that in a year. I mean, that's just not,
We don't have,
that's not rational.
we don't have the capacity to spell.
Now, it may be that you're wrapping up a large number of projects and therefore you're going to pay off big amounts of money. That's one thing. But what I think we really need to get to is how much can we do with staff? Are there resources that need to be shifted around to be able to, if we're going to move into more of a construction phase as opposed to just straight operations, which we've been for the last few decades, there may need to be a reallocation of human resources as well.
We may need additional engineers
Okay.
or operations people
or shift things
Yes.
around a little bit to do that. I think for a district or general manager that is strategically and financially focused, along with operational aspects, something like this becomes like essential.
Okay,
Right.
and that's
Yeah.
kind of what I was looking for, because
Yeah.
to me, if I were sitting on staff, I would need this or
Yeah.
something
Yes.
better.
Yes.
Now, I do think that the Water Master Plan did come up with a series of projects, high priority projects, totaling, I think it was around 75 million, if I recall right. To me, that's sort of, for planning purposes, where you would start. That and of course, recovery from 2017 and 2023 disasters.
Is that
And
the
2020.
2021 report you're referring to?
Yes.
Okay.
Yeah.
Got it.
So your candidate pool of projects is 2017 storm, 2020 fire, 2023 storm, water master plan. That's where you start. And once you have those, listed, you start dealing, you do a Pareto analysis, you start dealing with, what can we really do? What's the number we can hit every year with some reliability? Is it 5 million a year? Is it 7 million a year in terms of actual construction expense or time? And from that, you can then back into where the line gets drawn in each year, right? And over the course, I think the Water Master Plan envisioned doing that 75 million. I think it was over the course of 10 or 15 years.
Oh,
Yeah.
okay.
That was a long term.
I think they assumed a 5 million per year capacity at our district.
That sounds familiar. I actually went to the trouble of reading it.
And 5 million is probably 2 million more than we've historically done prior to 2018.
And we have fundamentally two kinds of constraints here. Do we have the money
Yeah.
And the
each
people.
year? And
Yeah.
do we have enough staff to manage those projects?
Right.
Because every one of those projects requires quite a bit of management, engineering, consultants and things like that. So
And as I recall, just to circle the wagons, and the reason for this exercise was, one of the reasons was so it would give us some idea of how much we needed to borrow if we needed to borrow.
Well,
That is
and
true.
when,
And when,
yes,
right?
and when.
because, if you're only going to spend 3 million a year, it makes no sense to borrow 20 million.
Yeah.
Because you're not going to spend it for 7 years, right?
Yeah.
If you're going to spend 7 million a year and everybody's signed up, to do that, well, maybe borrowing 20 million is good. You can get that spent in 3 years, factoring in disaster things and all that too. So I mean, one of the, Heather, I don't know what shape this, the spreadsheets are in, but for me, it's always helpful for me to look at the spreadsheets, actual spreadsheets, as opposed to PDF files, because I can see formulas, I can see other things in there that I can't see in a PDF. Is that possible to get?
Yeah, as long as the attorney's okay with that. Yeah.
Yeah.
Okay.
I mean,
certainly-
technically, this is all in one giant spreadsheet.
Oh, cool. Even better.
Yeah, I mean, that's what I'm showing here is it's all in one spreadsheet.
Okay.
And frankly, I'd like
Yeah.
to see it too.
I did have a couple of questions about the assessments, the Olympia and Lompico assessments. Lompico assessments, I think, continue for another, well, let me back up a little bit. So there's also a Felton assessment.
What page are you on?
Is that, sorry, that's attachment 1.
Okay.
Is the Felton assessment treated differently from Lompico and Olympia?
We do not specifically get something in from Felton assessment. So unless it's coming in some other way,
Okay.
at least on the it's not mentioned in the financial statement report, and it's not mentioned in any of the numbers that I've seen to date.
Okay. I think Bruce is going to say it goes directly to
Yeah.
the county, somewhere else.
Mm-hmm.
Yeah, because that's all being done through property taxes, as I recall.
It's Community Facilities District number 1.
Yeah, but it's the money you pay directly, the Felton people pay directly to the county.
It's like a different district.
Yeah.
It's not this district.
Right. Anyway, the Lompico assessment, which is going, I think, for another year and a half, roughly. I think it ends in 26. That money effectively, because we have backed off from the commitment that we made to Lompico relative to replacing the service lines, that money effectively is going into a big pot. We've already done all the other projects for Lompico. The only one we didn't do was the service line replacements. So I would so given that the board has agreed to that, I kind of view that money as available to spend any way you want, because we've already spent all the money building the tanks, PRVs, meters, etc. But I think in the Olympia assessment, I think there's a loan associated with that. Is that correct?
There is.
Well, that's not really,
and it's not covering the loan payment.
What do you mean?
Annual loan payment exceeds the amount we get annually.
By how much?
I don't know offhand. I just remember when we were analyzing for the debt, the possible debt issue, me and the bond team were looking at that. And so it actually exceeds that.
By a lot or a little?
I'd say by, if I remember right, by a lot.
Okay.
Yeah, so a slightly different topic, but SLVWD has not done consolidations particularly well financially in the past. We'll cover that, I'm sure, at a different time.
Yeah.
The rental revenue is like for this building here, is that correct?
I believe it's that, but well, you know what? I don't know that for sure. I was thinking it was some tower rents. That might be the mobile Cs. So
yeah.
Yes, it probably is that building. If you're in the building that I'm pretty sure you're in.
Yeah, we're in the Johnson building here. So
yeah, down the street from the main offices.
Yeah, or whatever we're calling it now.
12788 highway.
Yeah, sorry, the Johnsons were friends of mine, so I still call it the Johnson building. Their dad owned it. Yeah, the mobile service lease fees, I think, is for the tower.
Yep. And I think we just cut a deal with another tower company So
Oh, okay, well, that'd be
we
great.
just cut one with a Verizon or somebody to add a tower somewhere.
This is kind of a little one, but what settlement and purchase agreement?
That, I believe, is the amount we get annually to go into the, what is it called? It's a restricted amount on our book. Oh, sorry. Sorry, the name of it is escaping me, but we have certain property set aside for something environmentally related.
This
Oh,
is
yes.
for the, this is for the Sand Hills,
And Hills up in Olympia.
mitigation, yeah,
Yes, I believe it's related to that.
okay.
And that's about the right amount for that too.
I think on the waste, one of the things on the cash flow is separating the wastewater out. It's not- We really shouldn't be touching that money. I don't know if there's any way to move those into a completely separate category, but are the only entries associated with wastewater is the wastewater service under revenue and the sewer under operating expenses?
That's really essentially a separate business.
It is.
It is.
And this assumes that Measure U passes. Is that what I'm reading here?
Yes.
So if it doesn't pass, that'll immediately trigger an update to this.
Absolutely. yes.
Correct. These will be eliminated.
Well, I think the other thing is, I mean, this assumes that the board takes no action when Measure U passes.
Yeah,
I think that's a huge,
it's unlikely.
that's a huge asterisk / note that needs to be added to this.
Yes. I'm certain that the board will react in
Because
some manner to adjust bills.
I mean, we can't make a decision for the board, but it's inconceivable that there wouldn't be a response with the passage of Measure U.
Yes, you're absolutely right.
And this really brings a, I mean, this really skews the, your calculations here in a way, Heather, that I don't know that you necessarily meant to.
I'm guessing she had to just make a decision and go one way or the other.
Yeah.
Yeah. This is the more
Assumptions.
conservative.
It is.
Yeah, but that's where notes come in really
Yeah.
important.
Right, she should, yeah.
That's where assumes passing of initiative, right?
Yeah, but I mean, the other note is also assumes no board action in reaction to the passage of Measure U.
Yeah, we should add that.
These are really critical.
This is like a worst case scenario.
Well, it's more than that. We're in the middle of a political campaign, and when information comes out from the district, it needs to be fully neutral.
Yeah.
And while I understand,
fully clear as to what's
fully
included.
clear, and while I understand that you're taking a very conservative approach here, that in itself needs to be disclosed. So this assumes passage of Measure U and no board action taken in response to passage of Measure U. That would be note 6.
So I've got one that, I'm going to circle back to one of the issues I brought up, because I've got a hard stop at 3, and it's the FEMA issue. Because this is a planning document, not an audited document, is there some best practice we could use to plug in some FEMA numbers that would make this more valuable? You know, some best practice, like we assume a 80% discount or a 20% discount. We assume an 18-month lag from time of project, something like that we could we could note and say, these are these assumptions we're making,
Yeah.
but it's real money that we're going to get. And I don't see how we can do,
But the question is when
well, right.
and what's the.
But we know it's not never, or at least
Yeah.
most of it's not never. If we have some, again, it's a planning document.
Yeah.
So I'm just wondering if there's some best practice that we could use going forward to account for the FEMA funds, because you can't do a cash flow if you don't
Yeah.
account for a big part of your inflow.
Well, I think that's really valid. And the way I would typically do something like that, where you're completely apparently at the whim of Sacramento and when they're going to get around to dealing with a really small place like us that has no political pull whatsoever, is you put it as a separate line item under your, at the end of the cash flow analysis.
Oh,
And you heavily footnote it and you make some assumptions about,
Yeah.
when you're going to get it and all that. It's rolled in, and because it's such a huge number, you really treat it as a completely separate thing. And because otherwise,
yeah, there's not, yeah, it's,
Yeah.
you can't not include it somehow.
I mean, unless we can get, John Laird or Gail Pellerin to help out here with
Yes.
Cal OES.
That's a
In
good
fact, I think Cal OES used to work for John Laird. So, I mean, they can't keep us hanging forever. I mean, it's okay to tell East Bay Mud, hey, you're going to have to wait 18 months to get your $1.5 million. It's East Bay Mud. $1.5 million is a rounding error. For us, it's serious money
It's
that,
the guts of our plan.
So I guess that's my only comment. We should do something like that and raise it, make
Yeah.
it visible. Is a
Much
separate
more
line item,
yeah, separate line item.
Much more visible.
and make some assumptions and asterisk the heck out of it.
Does that make sense, Heather? I mean, something that,
It does. Yeah,
Yeah.
I'm making notes as you guys are talking in my spreadsheet. Yeah, believe me, I want to put something in here. I want this useful and practical, and I always err on conservative.
Which I agree with.
Which is
And
fine.
so I mean, right now I'm trying to work with the auditors on what to put as AR, because I don't have a good number that I'm really comfortable with, even after talking to the consultant. So
when you talk about AR, you mean for our operations AR or
well,
FEMA?
it's called grants receivable, and that's FEMA. FEMA's a part
Oh,
of
yeah.
that.
Oh,
And
I didn't
so
know.
So grants
yeah.
receivable.
It's called a grant. And so I have to figure out what that number is. And
Well,
yeah.
I mean, it's a judgment call. Certainly the auditors can help out with there, but I think you
Right.
just heavily footnote it and you list as a note, everything that is outstanding.
And we assume we'll get X% of these.
And really that's I think, Heather, the best you can do on that. I mean, because what I'm reading here is we've only received 608,000 from FEMA this year. That's
Joke.
That's 2420.
Yeah, so far.
So, yeah,
I mean, that's outrageous. I
Yes.
mean,
it's a joke.
and we received nothing in 23, 24.
No, that's what I was just looking. Hold on. Something is not right about these days. Because 23, 24 is not done. So that can't be actual. So that's 22, 23. And so hold on.
Oh, the title.
Yeah,
the heading
yeah,
group.
it was off by 1 year. So
okay.
that's what I thought. This is what we actually received from FEMA last fiscal year.
Okay.
This as in 23, 24 ended June 30th. And this year, again, this is the projection that's in, and I believe we've received a small amount, like 45,000 in the first 3.5 months of this fiscal year.
I'm mighty generous of them.
Yeah,
Yeah,
By the way, I don't know if Bruce has any comments on
I
that.
think all our money is going to North Carolina or something.
Well, I mean, that is,
That didn't help.
you know, I mean,
That doesn't help.
they certainly are much worse off,
Yes.
right, than we are, but,
Yeah, we haven't had a lot of deaths.
yeah, but, we still need to be able to get our money.
Nice to get
So-
more.
Let's see if we have any comments from the public. Mr. Holloway?
So a few months ago, we were talking about Aptu. And as I recall, there was like 6.9 million we were expecting to get from, we were calling it FEMA, whether it's FEMA or Cal OES, I guess it's all the same. But just a few months ago, we were hearing about the 6.9 million from Aptu. And that, the way I heard it, that would be, we were expecting that by June 30th. And so I think there was 600,000 already and another 6.9 million by June 30th is what I remember. And then for the next year, there was an additional $9.6 million from FEMA that was being talked about with Acton. So I guess at a gross level, what I don't want to see is for the district to borrow $19 million and then within a year or so, get 16 or 17 million for FEMA, and then we'll have $35 million sitting around trying to figure out what to do with it. So that's what I was really hoping that this cash flow analysis would help us do. And it sounds like we don't know anything about the 15 or 16 million dollars that we were talking about just a few months ago. And Apton is our consultant; they're the experts. So there's a $16 million gap right there, and I don't know how you can do much planning when you can't tell from one year to the next whether there's going to be $16 million or not. The capital spending for this last year that just ended, I think we undershot by more than $10 million. So I don't know what kind of financial planning you can do when you're off by $10 million a year or $16 million in a year and a half. I guess I really don't know. We should probably be working Gail Peller and John Laird and see what they can tell us about why we have to, and the county's in the same position, I guess, except they seem like they've collected a lot of their money.
Yes, I would comment that just a month ago, the county was claiming that they were owed close to 100 million from FEMA.
Well, they said over 100.
Yeah, or over.
And then lately I've been hearing 50 million.
Yeah.
So that's indicates that they got a substantial amount of money, and it looks like we are not. There was some talk about the replacement cost. It says 150 million here, and then you guys were saying no, it's really 375. And then I heard that you talked about it at the time of the last audit. So when people say audit, I think of the audited financial statement that comes out once a year. And that's not the place I would look for capital replacement costs. In fact, I think if you look for capital replacement costs in the audited financial statement, you will not find anything about it. So that's not where to look up capital replacement costs. The audited financial statement is really about history. It's not about the future. It's not about projections of capital replacement cost. So whatever that discussion was, I don't think it was the audit. And I don't think the auditor was discussing capital replacement cost with you either. But the time that it usually comes up is when you talk about reserve fund policy, and we already covered that a few months ago. And it was 150 million was the amount that was used. So I guess.
Well, that's a subject that we need to look more deeply into and
Yeah, and But this FEMA, I mean, it's $16 million. Somehow we gotta nail that down. I don't know how this, is ever gonna work if we can't somehow plug in $16 million from FEMA. And then one more thing, I guess, about the wastewater. I heard it said that it was a separate business. Well, in the accounting world, I think that's called enterprise fund. So wastewater should be a completely separate enterprise fund from the water fund. And is that the way our books are, or somehow does our accounting system think we have a general fund and we don't have two enterprise funds? Can we clarify that? Because I'm a lot more interested in the water fund. I think we ought to just factor out the wastewater fund as a separate topic. And so then it wouldn't show up in here at all.
I have never seen anything to indicate that we have a separate enterprise fund for wastewater.
Well, that is the way I remember it 10 years ago when Karen Alvarez was the finance manager. There definitely was.
There is a separate sewer fund in our
Okay.
system. O1 is water, O2 is sewer.
Okay,
Okay, interesting.
so I think we've made a number of suggestions and requests for modification of this. At the moment, I don't have any additional questions. Bob, do you have any additional questions or comments?
No, I think at some point, we talked about this earlier, we need to be looking at that master list of disaster and
Yes.
water master plan capital projects and lining them up on what years
Yes.
they're going, what year and priority, et cetera, we'd be looking at. I don't know if that's us or engineering committee, but somebody needs to do that in order to be able to help Heather plug those numbers in here so that we can have a better view, at least of a 5-year plan.
So who's going to take an action to resolve that question?
Yes. So interestingly enough, several months ago, I had requested that Mr. Fruss direct engineering to put together such a list with the timing. And I have not seen that, and with all the other commotion going on around changes in management, I don't know if that ever happened, but I did request exactly that several months ago.
I believe that is the priority list and the timing that is in attachment 4.
And you think attachment 4 is everything associated with disaster and the water master plan?
No, that is the priority list that came out of the engineering committee that said, out of all of the projects that are listed in our CIP, this is the priority list. And that is from the committee. And this is, President Hill, this is the results of the committee and the engineering manager working with the former general manager and the
Okay.
timing as well.
Do we know if but I mean, the timing, it looks like it ends in 25, right? Or
25, 26, basically.
26.
I mean, there was a couple of items for 26, 27, but
Correct.
So-
That is what was provided to
So-
me from that committee.
And so do we know that they looked at the water master plan and all the disaster projects as the starting point for their review?
That I do not know.
Okay.
Yeah.
It might be helpful to find that out because I think I mean, there's no reason spending $100,000 on a water master plan if we're not going to use it.
I know Garrett uses it religiously.
And that's great. I just want to make sure that we're using it
For
with
planning.
respect to this as well.
Right.
Because there's some studies we do that we don't use at all, like the urban water management plan. The last 2, we basically put in the shelf, spend $100,000, put in the shelf and don't use it. So I'm glad, we're using this. But I think that's just a pretty simple question, what they started from.
I'll clarify that with Garrett.
All right, then Heather, once you make the modifications, if you could at least send me the spreadsheet, and sounds like others would like it as well.
Yes,
that'd be great.
absolutely. Please.
I will do that. Thank you.
Watermark it with draft and all that other sort of stuff, so that, yeah.
Yeah.
Yep.
No, I think this is
It's a good start.
great start,
Yes, it's really,
great start.
yeah. It's
Thank you for putting it together, Heather.
with the. a
Yeah, the
few-
format's good.
Yeah, with some tweaks that we've discussed, and I think this would be very useful for planning.
Thank you.
Let's see. Let me just close that for now. So I believe this is the last item on the agenda. Is there any other items or things that anyone wants to comment on?
If it's not on the agenda, no.
Pardon?
If it's not on the agenda.
Not on the agenda. So I believe we're done with that item, so seeing nothing else, we will adjourn the meeting.
All right,
Thank you.
Right.
thank you.
Thank you, Heather.
Yeah,
Very, very good work.
nice to see things heading in the right direction.
Yeah,